Welcome back to Out of the Rough. I'm joined by Fred Krieger. Fred Krieger is a mortgage advisor with American Family Funding, and today we're going to talk about VA loans. You know, Fred, there's nothing better than a veteran coming home, being able to take advantage of his GI Bill, be able to take advantage of going to school. But one thing that's overlooked is taking advantage of the benefit of buying a house.
Right, exactly. And it's funny, you know, Fred, you and I always talk about the whole aspect of, and I always bring this up, servitude. You know, what do you give back to the community? And this is probably one of the greatest programs that you and I can give back to our served military, active duty, et cetera, and veterans. I mean, of which right now, if you know, there's a statistic of 22 million current veterans right now, of which only 7% of that 22 million take advantage of VA loans.
Yeah, take advantage of it. And I think it's awareness. I was talking to many veterans, and they'd say, you know, we get all this training on X, Y, and Z, but when we're getting out, we get an hour training on benefits.
Right.
Or a couple hours training on benefits, and very little on the VA loan and how that works. So.
Right, and that's one of the things that we wanted to, you know, participate was what that, you know, those transitional classes, which is really important. So, I mean, let's touch base real quick. You know, what are the great benefits of this VA loan? And the biggest one that I think people understand is it's zero down payment.
No money down for a house.
Yeah, isn't that amazing? And no mortgage insurance. So even though on a traditional loan, if you don't put 20% down, you have traditional mortgage insurance, whether it's government or whether it's private mortgage insurance. On a VA loan, there are none.
Yeah, when you think about it, if a $500,000 house, you and a spouse, let's say the veteran does X and the spouse does Y, buy a house for $500,000, no money down.
Right.
The mortgage insurance on that, on an FHA loan, would be somewhere in the range of $600 a month. You don't have to pay that on a VA loan.
Right, especially on today's standards. And, you know, there's a lot of myths, and I think that's why, you know, we go back to that whole, why is it only 7%? Because there's a lot of myths about VA loans, and I hope we dispel that as much as possible. So, for instance, if someone used their VA loan before, a lot of them think that I can't use it again. Well, that's false. You can use it throughout your entire lifetime. You could use that VA loan again.
Over and over and over again.
Right.
Yeah.
And even the other myth is that you can't have two VA loans at the same time.
Well, yes, you can, right?
Right. And there's a couple stories. Let's say someone is stationed up in Edwards Air Force Base. They close escrow on a house. They're there for 30 days, and all of a sudden they get shipped out to Los Angeles Air Force Base. Well, guess what? They can keep that current VA loan on their departing residence and get a brand new VA loan at their new residence. So technically, they can have two VA loans.
Yeah, yeah. And you can use the departing rents from being able to rent it out. You know, there's all kinds of benefits to that. So single-family houses, what do we typically
So usually 1 to 4 units, single-family residence. Condominiums are okay, and we just have to make sure that the association themselves are approved by VA, and you know, very easy to, you know, search that for myself.
Okay.
We can look that up.
Credit.
So credit standards, everyone, you know, there's another myth that credit is, you know, much more stringent, but it's not. It's the exact opposite. Really what the VA looks at is, you know, what have you done over the last 12 to 24 months? Even bankruptcy, foreclosure, short sale. They look at what have you done over the last 24 months. Even if you actually foreclosed on a VA loan in the past, believe it or not, you could be eligible for a new VA loan. And again, they don't look at necessarily credit scores, they look at creditworthiness. They look at, you know, in other words, what have you done? And even a statistic looking at VA loans as a whole, if you look at it itself, it is probably the least amount of, I guess, in the pool of loans that have actually had short sales and foreclosures.
Default, bad loans.
Yeah, it's amazing.
It is, because of their underwriting standards have always been a little bit different. And VA never did those stated income loans. They never did, if you will, subprime loans, which was very good for VA. Let's talk about purchases and refis. You could do it for a purchase. We just talked about that.
Right.
Can you refi a VA loan?
Absolutely. We're actually doing a couple right now on refinances, even doing cash out. You can do a cash out refinance, because I think a lot of people don't understand that, oh, it's just a first-time homebuyer program. Or, again, there's so many myths, but again, people just need to, you know, really pick up the phone, call us, ask the questions, or even, you know, keep listening to this you know, video over and over and over again.
Yeah. So Fred, I want to ask you about county limits. The limit of a VA loan, because it's different in every county in our country.
Right. So the limit in Los Angeles County is $687,500. Now,
so you can get a VA loan for $600?
Yeah, and even if the purchase price is more, that just means the veteran can put down that amount of down payment in order to get down to that limit. Now, there's a thing called a funding fee, which I don't want to go great in detail, but that funding fee, which is an upfront fee that goes to the VA, can actually also be funded through the loan. It doesn't have to be upfront.
Yeah. Smart. Last but not least, because we're running out of time, this loan's assumable. So if you get a, let's say 4% loan, 3.5, 4.5, whatever the rate is, right? You get this loan and you have it for 7 or 8 years. Can that loan be assumed by somebody else?
Yeah, and it does not have to be a veteran. So let's say, and again, 7 or 8 years, interest rates are 6.5%, 7%, and a person comes around and says, okay, I want to sell my home, and there's a person down the block that wants to sell their home identical. You can actually have a higher sales price because the interest rate is lower, and the person can actually afford that home versus the other home down the block.
As long as they can assume it.
Exactly.
Yeah, assumability of loans. We don't see too many of those.
No, not at all.
Yeah, yeah. Thanks for coming in. Those that want to reach out to American Family Funding?
Perfect is 661-284-1150, or the great website is affloans.com. That's Apple Frank LOANS.com.
Great, great. Love you coming in and teaching this to us. Fred's co-branch manager with me here in Southern California. I hope you enjoyed this little update on VA loans. Well, I hope you enjoyed this edition of Out of the Rough. If you'd like to watch this online, go to scvtv.com or fredarnold.com. If you have questions or would like to suggest a topic or guest, email me, fred@fredarnold.com. I hope this information gets you out of the rough and into success. Until we speak again, make it a great day. Bye-bye.